Okay. Good morning, good evening, wherever you are part of the world. Thank you once again for having this session. We are so glad to have an educative session today. As you can see, we are continuing with the conversation that we had 2 weeks ago. We are talking about investment in terms of insurance. Insurance is wide, and this is a topic that we have to learn. We have to be ready to, ask any kind of questions if you have not started this journey. So be prepared. If you have a question, please type it in on the comments. You can also look at the screens today. The guests are sharing their numbers so that they can be reached. So just know that we are on a journey. We are transitioning. If you haven't started financial journey, financial trip, be ready to get started. It's not late for you to get started. Again, today, my name is Sharon Adundo. As you can see, I'm one of the admins of Financial Hikers, and we have our special guests today. I'll let them introduce themselves, and then we continue with the session. Once again, thank you for joining in, and please ask questions. If you have any questions, comment, let us know what you think as we go on. Thank you, and let's Ruby go ahead and introduce themselves.
Thank you, Sharon, for the warm welcome. And thank you, Sharon, again for this platform. And again, I'm going to thank all the people who've been streaming in to watch these elaborate teachings. And as you've said, I'll repeat it again, insurance is quite wide. Some only thought it dealt only in education and maybe medical covers. But now we are introducing a factor that most of us don't know, which is investment. And today I'm here. My name is Ruby, to all those who don't know me. And we are quite a number. We are well represented. And today I'm just saying we are not going to talk so much. We are going to present a tailor-cut solution for every one of us. And after presenting it, we are expecting you to ask questions, and we are going to work on your questions so that you don't walk away with a lot of questions not answered. So I am Ruby. We have.
My name is Sally. Thank you once again for giving us the opportunity to talk to you. I know some people are watching us from Kenya and others from outside the nation. So we want to say thank you once again. Now, last week, 2 weeks ago.
It's just an introduction. So, okay, and then we'll have James introduce himself. James?
Hi, everyone. Hi. Hope all of you are doing well. Thank you, Sharon. Thank you, Ruby. I've been really looking forward to this session. I want to believe today will be a very, very interactive session, and we'll be doing a lot of engagement. I also want to believe that we'll be talking about very, very well doctored vehicle tools or financial tools that can really, really put you on par back at home. For those who are watching us from any part in the world and you always think about Mother Kenya, which is your home place, feel welcome. For everybody else who is in the country, feel free as we do this engagement and trying to educate and have a discussion on this. If these issues pertain several lines of insurance and investment portfolios, feel free to contact us, reach us. Our numbers and our emails are just written there on your screen. And I want to believe today will be a very interactive session. Back to you, Ruby and Sally. Thank you.
Thank you, James. Again. Okay. Thank you, James. And again, welcome once again to this forum. And basically, we already talked about why it is important to invest back at home, why your dollar is quite important to you when it is here at home, and why you have to invest with Britam. And I told you, if you ever have questions, there's one thing you'll always know. Google is your friend. People might talk so much about the company we are working in, but when you Google, when you go to Google, it will show you that when you join the family of Britam, you'll be joining a very good family. And after that, we are not going to talk about any further why you should be investing at home. Now we are going to give you tailored solutions. We earn money differently. We earn a different amount of money, and then our investment plans are different. And that's why we are going to give you distinct solutions, distinct, like a solution that will easily work for you. Because you know we are not going to coerce you into a solution that doesn't work for you. You have to pick a solution that works for you, and that's what you are going to present, a financial plan. How do you start? How do you grow? Because so many stories are out there. Even my sister Sally is going to share one of a success story, because she's going to share success stories. Some of our brothers who are in the diaspora, how they did it and how it can work for you. Because one thing, our previous, we had a speaker in the Kenyan parliament, which who he said one thing that was good, and that I usually love to share it. A fool is one who doesn't learn from other people's experience. You have to learn from other people's experience. You have to see what they did, and so that you don't tread the paths that they treaded that ended up wrongly, but you tread on the paths that brought them success. And another saying that I usually like sharing again is one that says, you can never fly as an eagle if you walk with the ducks. There is no way. If your investment is in the level of the ducks, that's where you'll remain. But you want to fly with the eagles, see where they're investing. And we are showing you the spotlight where those eagles are investing. Some people might question, my money will be stolen. Why should somebody with billions and billions invest in this company, and you who is trying to grow will fear investing? So we are doing away with the fear, and we are showing you a plan which will bring success into your life. And with no further ado, I'll let our sister Sally come in. She's well in her good attires, the Britam logo, and she's going to present. Thank you, Sally.
Okay, thank you once again. Thank you, Sharon, for the opportunity to meet the ladies, and thank you, ladies, for joining. So, as we were saying the last 2 weeks, we introduced we talked about Britam and what it does. But then today we want to just go in deeply about financial planning. Why we insist that is we want you, wherever you are, even if you're in the nation, even when Kenya, just have some savings, a saving, so that later it can help you, probably in retirement or just investment. So basically that's what we're talking about. And so the type of investments we have, one is lump sum. Maybe you have some money you've kept aside. Instead of that money staying in the bank, you can give that money to us, we invest for you and give you a very good rate from between 12% and 13.5%. But like actually, the rate was better before COVID, but then after COVID, things were a bit down, but then we are trusting God that things will come back again. So the rate is very good. So investing could be one lump sum. You can give us money to invest for you. And those are like money market funds or wealth management. Later, maybe you can ask any question if you have. But then another one is you monthly, where you pay like monthly or yearly or semi-annually. So this one will help you. Probably you have a goal. Maybe you're planning to maybe in the next 5 years, you want to buy a plot, or in the next 5 years, you want to build a house. In the next 5 years, you want to build some rental houses. Whatever the plan you would be having. And for this, I would want you, when you get during your free time, you can Google. In the next 5 years, you can Google the Kitusuri Amani Gardens project. Kitusuri Amani project. Kitusuri Amani Gardens project. These are guys who are based in the US, and they came together as a group just to buy a plot here in Nairobi, Kenya, Kitusuri, and they've built some good rental houses. You can check that later. So this is basically what we're talking about. So you could come as a person, you could come as a group. For them, they came as a group and they bought that plot and now they build. But then if you're planning to do it maybe individually, you could just have a way of saving your money, small money, whatever it is, $100, whatever it is. Then later, buy a plot. Or the next 5 later, now you can be able to do what you need to do. Now, I guess some of us have had, you've had like, there's this person who works in the US or a UK, and then sometimes after some time, maybe they've been sending money home for someone to help them maybe purchase a property or maybe do this and that. I personally have a relative who works in the UK. He came to my place like around 3 years ago. He works in the UK, and he was telling me that, Sally, I've been sending money to this relative of mine to buy me a plot, and the guy has been promising on phone that he's actually bought the plot and even developed and done that. Only for this relative to come back and there was nothing. There was nothing. So this one, it's just so. By the way, this is very hurtful because your hard-earned cash is just lost like that. It would be better for you to have something like maybe a savings plan, maybe now, maybe with insurance, with Britam or whatever the company you decide to go to, so that later when you come back to Kenya, maybe you come after 5 years or wherever, that money is secure. And by the way, we give, now for, I'm talking for Britam, we give you statements, and the statements are done every month on request. We have something called customer portal, client portal. You can actually access you can check your statement, how it's performing, how much money have you earned. Let's say you were done 100,000, how much is it now, like that. You can actually manage. You can see the way your fund is growing. So you'll not be afraid. These people made me join Britam and then they disappeared or something like that. No. So you can check the product yourself. You can check the statement every month, and now you see the way your fund is growing. Okay, so as Ruby had said, that we have tailor-made products for each one of us, depending on exactly what you want as a person. There's this person maybe who want in the next 5 years, they want to have done something. Or maybe you are a young person, you still have a lot, like a whole 20 years in America or UK or wherever you are. Then you're saying, maybe when I come back to Kenya, I would want a lump sum amount, like maybe 30 million, 20 million, something like that. So what we encourage you to do is actually to consider one of these policies. Now, another benefit these policies have, apart from the investment part, is we have death cover. Death cover means if by any bad luck, God forbid, that you lost your life, your next of kin, like your children or your family back at home, will be given this money so that they're able to continue. You see, you've been helping them, maybe pay bills here and there, and now probably you're not there. So the death cover will be paid to the next of kin, the one you've mentioned on the document. Something else, it has good returns. The amounts we're talking about as really good returns. When we come to the projection, James will help us do that calculation. You will see that if you took a policy, let's say for 15 years, getting the amount of money, when you get the amount of money back, it has a very good interest. Number two, and those amounts are guaranteed. So it's not like we're saying, now that last year we had Corona, we had COVID, we cannot be able to pay those payments. No, we will pay. We will pay. And so just be assured that whatever we're going to tell you are good things, and they will help you. Finally, I wanted, now talking about death cover. I have a client of mine here in Kenya whose the husband was my client, and he passed on through a road accident. I went for the burial, but we gave this wife, now the wife, we had taken a policy for the children. We gave her 2.5 million Kenyan shillings as death cover, and every year we are paying 200,000 for the upkeep. Of course, it was for education. The policy that he had bought was education. So each year we are giving this lady 205,000 every year for education. She has 4 children. So the lady can comfortably take the children to school because that takes care of all that. Takes care of course, we've paid the death cover, and then now we are paying the fees every year back at they finish university. So it's a good plan. Thank you. Now, I would want to welcome James, who will take us through one product as we continue. Kindly be free to share any comment, any worry, anything, any question. We're here to answer you. And thank you so much. James?
Thank you, Sally, very much for that. I think I really got a lot from that, and I believe this engagement platform is really working wonders for some of us. I'd like, before I can just begin on that product, maybe to welcome Sharon, maybe to just, if you have any query about anything that Sally just asked, maybe I have a question or anything before I just begin diving into the products.
Thank you, James. So far, I have some questions drafted down, but they haven't touched like what. I have some questions I'll ask later on. So I'll let you proceed, and then we'll go on after you present to us what you have in store for us. Okay? And in case you're watching and you have any questions, please feel free to ask your questions. Write them there in the comment. You can also take down the phone numbers for James, Charlie, and Ruby listed on the green section, so that if you need any help to get any clarification, please reach out to them, because we are giving free information, and information is power. So we need to get to, accustomed to learning in order to be able to move to the next step. If you know you are financially struggling, if you know you don't have insurance, if you know you've not started insurance journey, it's not too late. That's what I'm saying. Because this is something that we need. But example, as Kenyans, we don't like talking about insurance, or you just say, after all, if you die, watu watashughulikia. But if you have kids, or if you are really considerate about who you are leaving behind, because at the end of the day, we are all going to die. But we can try to plan our way forward in order to make life for our kids better, in case you die today, if you have kids, or in case you get sick, or in case you get disability. You never know about tomorrow. So insurance is wide. And today they are just touching on, we are continuing from the past conversation. So feel free to tackle the big elephant you have in the house. And I know they're talking about big figures. I want them also to remember we have those who are saving 100 shillings a day. We'll get back to that. James, I'll let you continue. Thank you.
Yes, thank you, Sharon. I believe we are going to have each and everyone in-house. And as we earlier said, that most of these plans are normally tailor-made, custom-made, depending on the budget and the specific needs of the client. I can see very many comments coming in. I think Sharon will get to that later on. Let me just begin and dive straight into it. Now, for today, I wanted to present, I had some very, very good slides. I don't know, I've been having a challenge with presenting my entire screen on StreamYard, but that not being a problem. I'll just go ahead and dive into it. We have a very, very nice product that is more of a savings plan that creates an investment tool that you use as a saving platform for a specific number of years, depending on your plan for the future. Now we call it in Britain, for the ones of us who might be taking down notes, to maybe go onto our platforms and look at it on our websites. It's called an Akiba plan. An Akiba plan. Akiba, just as it says, AKIBA, Akiba, kuweka Akiba. So what we are saying, it's a saving plan that normally has a 5 to 12 year term. The term of the plan itself is 5 to 12 years. And we normally have features, some of the features. And some of these features include what? One of the things is that we have a minimum entry age, which is normally 18 years. And we also have a maximum entry age for this plan, which is normally 65 years. So that means for you to be able to purchase this cover, you need to be in and around those age brackets. The other thing I can say is the plan itself has two options. One of those options is an option where in underwriting we do a medical, involves medical, or what we call lien and non-lien in insurance. What we mean is the underwriter, using your premium, just does a health background check. We just conduct some tests here and there, and we are able to offer you the cover at a bigger platform. The other thing I can say is I just want to go straight. Those are some of the features of the plan, but basically it's a term product which is from 5 years to 12 years. You can decide to pick a 60 months or 5 year saving plan, or a 6 years, 7 years, all the way to 12 years, depending on the investment tool and the duration that you're looking at as an individual. Now, Apart from that, we have benefits of this plan that are cut across several lines, and one of those benefits are maturity benefits. When we say maturity benefits, what we mean is it's a 5-year plan. So what we are looking at is we are looking at a scenario where once the plan matures, you are guaranteed payments of 100% of the maturity value at the end of the term, which is a sum assured per se. What do I mean? Let's take a case study, a case example, that is, assuming you're doing $1,000, $100 per month. What we are saying is at the end of the plan itself, because it's a 60-year plan, you'd have done per se, if you're doing $1,000, you'd have done $60,000 in 60 months. It's as simple as that. That is if you've picked up a plan for 5 years. Now, that being said, what we are saying is once the policy matures or the plan matures, you are guaranteed, it's a guarantee that you'll be receiving those funds at the end of the 60-month period. Now, the other benefit of this plan is it has a free inbuilt waiver of premium in the event of the passing on of the policy owner. Now, sometimes in insurance and in life, insurance covers some basis, some life issues, that is the value of the maturity fund, and it also covers in the event of death. We do both, and those are some of the differences of investing your funds into insurance funds and insurance schemes, because we offer you an investment with a security attached to it. That's why I'm saying the second benefit that we offer for this plan is we have a free inbuilt waiver of premium on death of the policy owner. Here, the company will waiver premiums in the event of any unfortunate demise of the policy owner during the term of this policy, and keep the policy in force until maturity. What I'm saying is the same case that we had of a client who is doing, say, $1,000 a month, and the plan is a 60-month plan. What we are saying is, in the event the policy owner was to pass on after 12 months of contribution, now there is a remainder of 48 months. There is a waiver. The 1,000 that the client would be sending to us as a fund will not be required to be sent back to us, but the policy will be in force as a guarantee. If the estimates of that plan was that she will be receiving $60,000 and the interest on top, what we are saying is we waiver the premium that comes to the company per month, that is $1,000 per month because of the passing on, and we will offer the $60,000 at the maturity of that plan, of that policy, to the beneficiaries. I hope I'm very, very clear on that. The other benefit of this plan is that we have an optional lump sum death cover. What do we mean by that? We say this cover will pay the lump sum benefit in the event of death of the assured life. The death benefit should not be more than the sum assured, which is the main benefit. What we are saying simply is we will offer the lump sum on death of the policy owner to the beneficiaries. It's as simple as that. The other benefit that this plan has is that we normally have a surrender benefit in the event of any financial constraints or contractual issues, such as when COVID came around. I know some of us, our contracts have been affected, or our income in one way or the other, and our jobs maybe. So we normally offer a standard non-forfeiture option after 25 months. What we mean is from the 25th month moving on, you can access all your funds, and we offer you as a surrender benefit because of the financial challenges maybe that you may be going through. The last thing that we have as a benefit for this plan is that we offer a tax relief, which is eligible for policies of a range of years. So those are just some of the benefits, key benefits that this plan would be able to guarantee you. If you're looking at a plan of a 6-year plan, maybe you want to do a wedding, you want to do some investments when you're back to the country because your contract is a 6-year plan, this is one of those plans that I would advise you to really, really look into and use it as a tool of investment. The other thing I can say is, number one, we ensure that this plan has a very competitive customer return because of the range of the interest rates that we normally attach to it. The other thing that we normally ensure with the plan is that the short to medium term options are visible or are foreseeable by the client. What do we mean? We mean 5 years is a general is selective. I know it's selective, short term or long term, depending on who is looking at it. And we try and make the plan as flexible as possible, where you can pick the term that you wish. But our minimum term is 5 years and our maximum is 12 years. The other last thing I can say is the product is very simple, very simple. It's a simple product with a simple design, which I just talked about in the last few minutes. And we ensure that we have high maximum entry ages. You see, 65 is a very good entry age for a policy holder or policy owner looking at the benefits that this plan would be able to give you and guarantee you. So that's one of the plans that I was just looking into and trying to ensure that you have a clear picture on how it works. So I think that being it from me, that's just Akiba for you in a nutshell. That's Akiba for you in a very simple design manner. And I believe it's a product that can really assist most of us back home, back here home, and everybody else out there in the diaspora to do their investment and save with a serious investment too. That being said, I think I want to invite you, Sharon, back. Thank you. That's it from me. I'll be looking into a lump sum investment in a few minutes. Maybe I can invite you to share any one or two questions from the chat box, or yes. Thank you, Sharon.
Okay, thank you, James. Thank you for telling us about Akiba. Let me just look at the comments here and see. Net Nyaberry saying, good job for that advice. Very dangerous to do telephone investment. Thank you, Net. She's also saying, hi, is that Super E Plus or which education policy that is? Because I thought it has some timeline for you to be able to get fully compensated. I think Net is asking a question to Charlie, asking if that's whatever example you used was a Super E cover. Can you help us with that? Whereby the lady is getting over 200,000 a year, you said. So I think that question is directed towards that comment. Would you help us address that first, Charlie, please? You are on mute.
Yeah, James, sorry, let me assist to answer that. To answer our client, the lady has a policy called Super Education. That one is for education, and it pays sorry for that. Now, the education policy, the one the lady, our client has, is pays 7 years. Like it pays, as she's saying, 20,000 each year. But then it goes like the first stage pays 15%, then 15% of the sum assured. I'm assuming a sum assured is 200,000 to be around. It's more than 1 million, around 1.5 there. So the super education policy pays 15% of the sum assured, another 15%, and then 20%, 20%, 30%, 30%, finally 100%. But the one James is talking about, I wanted to clarify that. The one James is talking about is investment. So you save some amount of money depending on, do you want to get the money after 5 years? The minimum time is 5 years. So for example, we say you want to save for 5 years. Saving, let's say you're targeting 1 million in the next 5 years. So after 5 years, you give it the sum, all the amount, 1 million. So we don't break it like the super education. Sharon, I hope that's clear.
No, the question was asked when you are talking. So this was basically the comment coming when you're still talking. So it was towards the education cover you talked about, because you said that the kids are given, you are paying for the education for the kids till they clear university. So I'm not sure, Net, you can help us answer this. If there is a timeline, or if your money is exhausted, let's say this person dies when the kids are in first grade. Do you pay all the way, like class 1? Do you pay still all the way to university level? Or is there a timeline for someone if they take a policy, let's say I take a policy and my baby is just getting into class 1, then I die along the way, will you take care of this baby till university, or is there a timeline?
Okay. Now, for education policy, for example, as you're saying, the baby's in class 1. So let us come to, I don't know which system we are talking about, but no, the system, in terms of, is it, let's imagine the normal 844. So 844, I'm sorry that I have to talk about this because we're Kenyans. But then when the child goes to Form 1, we'll pay Form 1, Form 2, Form 3, Form 4, university, 3 years, because it pays for total of 7 years. In case of death, insurance covers in case of death. So even if the customer dies at what time,
Even at grade 1.
it will still pay as though the client is there. You remember James talking about waiver of premium. So if the client was to pass on, God forbid, any time period they are already in Britam and they had gone for medical tests, we will pay from when we agreed, like the child goes to Form 1 up to when they finish university. Of course, third year now, going by 844 is third year they'll get the sum assured, now the 1 million, for example, which will now take care of third year and fourth year. Sharon?
You are talking about you 1 to high school. What about, we are talking about class 1. What will happen from class 1 to class 8? Who will take care of that?
Sorry, I thought we were using an example where the parent has bought insurance from Form 1 to benefit from high school through university. If that was the case, it would remain like that. We will only pay immediately death cover if the client has passed on. For example, if it was super education, we would pay 50% of the sum assured if the cause of death is natural. Natural is sickness. And then we would pay 1 million if I'm working on the sum assured of 1 million, for example. We would pay the 100% sum assured if the cause of death was accident. And then now that would take care maybe probably of primary school and some other expenses. If the agreement was we begin paying the education policy in primary, we would actually begin in primary. Yeah.
Okay, so thank you for that. I'm trying to be in that level of someone who has no idea about insurance and just trying to figure my life out. So let's use an example like today. Yes, I'm a mother. I have small kids. My daughter is just getting into kindergarten. What would you advise me to consider? What are the options here that will walk us through to get started?
Okay, we have policies, like someone can actually buy a policy to cover even when the baby is in primary school, through college, through high school, through college. Yes. So it depends. Okay, well, it depends with the parent, because some parents, most Kenyan parents would want to be paid from high school through university. But then, of course, now depending also on the fees. If you want to cover your baby, even from primary school, we can do that. The products are as
flexible,
yes, they're very flexible
as you want them to be. Like if you care for your child to be covered with Britam from primary, the elementary level, we will. It's just you bringing in your system to us. You know that in Kenya, there are two outstanding education systems. We have the British system and the current 844, and then we have the other one which they are introducing now. So when you walk in, you tell us what you care for. Like, I would love my child that he's covered with Britam through all his education. It is your money that speaks. That's why we said we cannot take all of us and put it in one station. No, we are so different. And I want to force you to be giving me maybe 10,000 per month, which you don't have. You are able to give me maybe 5,000 or $1,000 per month. So we don't force you into something that is not comfortable with you. We design it to be comfortable to you, and the agreement stands. Like, after your demise, let me say, and before the child has been taken through education, you are assured that your child will go through education as you had planned. Even if you can take even 2 education policies for one child, to cover maybe the entire education. That structure is there, and you are allowed to exploit. And that's why we are sharing our contacts, so that we cannot discuss an individual conclusively to present the rest of the people. We are just presenting the products, and when it interests you, you walk in, you call, we walk you through how your plan should be, and you agree, and we accept, and you start contributing.
Thank you. Sharon?
I'm still concerned. I'm still taking you guys back. Remember, we are here, and there is a Mama Mboga somewhere hoping and longing that, yes, I'm here hustling. I'm waking up early in the morning. I just get maybe 100 shillings savings a day, or maybe 500 shillings a day, or someone here on diaspora also just struggling and is able to save even $10. Do you cater for that market? Suppose we have a common wananchi, back home, Kenyans, people have different levels of income, even here where we are in the diaspora. Do you cater for a certain class of people, or can a Mama Mboga watching today or any other day, when she comes across or he comes across this video, contact you if they have that low level of income? Or is your company only catering for a certain income level of people? That's what I'm trying to.
Ruby, Sharon, thank you for that. Let me just take that briefly. Yes, we cover for all levels of income. Our tools and our investment platform tools are normally designed in ways that the returns per se, I just want to echo what Sally was saying. The returns are always characterized or brought forth by the investment size of the client. So what we mean that as a client, we look at your affordability, what you're looking to have as a size of a fund that you are feeling is comfortable as a contribution per duration, per month or per year, depending on these few parameters here and there. So what we are saying is we cover, we even have investments that do even 1,000 shillings that you're talking about per day, or per month, or per month, depending on what the client is looking at. But what we are saying is we have created a platform that allows everybody to walk in to us and have their needs attended to. By the way, it is very clear to us that we think like millionaires, yes, but we like that attitude of thinking maybe like millionaires, but hustling like you're broke. That mentality. I know Kenyans are very resilient and hardworking. So we have created that platform where, Sharon, today you can walk into Britain and say, by the way, I want to be doing 3,000 bob per month. That is at 100 shillings per day, which is a dollar per day in diaspora, or for anybody who's watching us from any part of the world. So what we are saying is we have that platform and it is very ready. What Sally and Ruby are just doing is they're just giving parameters and just giving figures that can assist us with our maths today and just understanding the backbone nature of the products. Thank you, Sharon.
Thank you for that clarification, and it's good to know that, because we are trying to also empower and just let other people who are struggling to know that they can move from one step to the other, and that's a good thing to know. This past week, I remember Ruby checked with me, like, is there any feedback from the past discussion, or are there concerns from people? And I would like to say, yes, there was a concern. We went ahead and discussed more about different investments and challenges that people have seen in the past year based on COVID. And currently we have a company that is also doing the same kind of similar thing. You guys are offering the product, but now people who are waiting for their money at the time of maturity are not getting their money, and it's becoming an issue. And I've seen posts circulating about that. Have you guys started experiencing that, or are there people getting that, also experiencing that with your product, like at the time of? there's no money to be given at the lump sum?
Okay, Sharon, let me that again. I want to describe the nature and the class of the investment business that we have in Kenya per se. And I want to say that for us as an institution, we are governed by the law of investments in Kenya and the several insurance acts that are always there and displayed to the public. And we are governed by a body called Insurance Regulatory Authority. We are also for money market and lump sum investments. We have the CMA, the Capital Markets Authority, that also governs us. And this is just to say that your investment is very safe on a platform that is managed by Britam, because one is we have security measures. And what we mean by security measures is ourselves as a fund, as an institution, we are reinsured. What we mean is your investment in Britam is also insured at some point somewhere else. And that is to say that even if one day there was to ever be any challenge to the institution itself, that your fund would be very, very secure because we are reinsured. There are companies that have reinsured us. I can't get too much into the details, but I know you know about companies like reinsurance companies in Kenya, reinsurance itself. And I believe that it is one of those things that gives clients confidence to walk into our offices and get quality services and believe that the lump sum nature of the plan or the investment is secured and guaranteed at the point of maturity. The other thing I can say is we the brand itself, ourselves as Britam, we pride ourselves in the brand, and we are very what do I say? We are very we like securing the brand very well, and we ensure that all claims and all maturity values are paid up on time. We actually send messages to you as a client, emails and everything on a consistent basis, and ensure that you're seeing what's happening to the fund. If it's a money market fund, on a daily basis, on we create that customer friendly nature to ensure that when it comes to the point of maturity, you feel the relationship has always been there, as our mantra says, every step of the way, Sharon. So back to you.
Thank you so much for that clarification, because it's important for someone watching and saying, oh, they're just talking about the same thing. So it's good to clarify to help someone also know that there are some other people still doing the right thing out there. And in case you're having different experiences with Britam, please share with us, because they're here trying to address issues, address questions. So I know last time we had some, if you missed the last session's video, go ahead and Google, scroll the page and you'll find it. We had some questions also answered in that session. We have a comment here by Deborah Eunice saying, are there bookkeeping charges? Could you please share the kind of charges applicable? Yeah, we have a question from Deborah Eunice asking if there are bookkeeping charges. And could you please share the kind of charges applicable?
Okay, what we have is we call that withholding tax, only for investment, money market, and wealth management, and Imarika. Those three have withholding tax of 15% as per the government
Requirement.
regulations. Yes.
But the rest don't have any hidden charges, like the Akiba that James has shared. You can calculate your money actually and how much you're going to get. And in fact, the government taxes are known, and it's not something that will just pop up at the end of your investment. You invest as you know that this particular amount is not withheld in Britain, but is the requirement of the government. Sharon.
And please remember that the amounts, let's say you're working on, for example, 5 million, 10 million at the end of 10 years or 15 years. Please note that amount will be paid exactly, they're all 10 million. We don't tax, that money is not taxable. We don't tax that.
The only taxed is the interest that your money has earned. That's what is taxed, but your money is not taxed.
Okay, Sharon.
Again, once again, thank you so much for answering the questions. I see we don't have any more questions from the comment. And based on time, we try to keep it short as possible. So whoever is watching, thank you so much for watching. Whoever will watch later on, we appreciate you. And this moment, do you have any other thing you'd like to add before we end the session?
Okay. James had taken us through Akiba. I could mention Dhamana briefly. So Dhamana is it's an endowment plan with guaranteed cash bonuses at the end of the period. So we don't have like 5 years, 10 years, 15 years, 20 years. It's only one term, 15 years term. So if you're looking at getting your money after 15 years, like the 15th year, you given lump sum. And as we said last time, this policy pays 320% of the sum assured. And we went ahead and did an example of sum assured of 10 million. So 10 million means the customer will get 320% of that, which is 32 million. And of course, the premiums were, of course, depending on your age. The age you worked with last time was coming to around 145,000 per month, Kenyan shillings. Now, apart from the good interest, well, the interest is not as high as the one for Akiba, but it has other benefits like in case of accidental loss of a limb, client losing one limb, you pay 50% of the sum assured. Client losing two limbs, you pay 100% of the sum assured immediately, and then you still pay that when the policy matures, or we pay that on death, whichever comes earlier. And then another benefit is loans are available. Should do like because of any reason you want some loan out of your policy, we give you a loan after being a client for 3 years. And something else, tax relief now is applicable to those who are in Kenya because they pay taxes to Kenya. And so we give them a relief of 15% of the premiums. Of course, loans, accidental loss, and death. In case of death, God forbid, the company is going to pay. One, if the cause of death is natural death, like somebody just falls sick and passes on, we pay that. We pay 100% of the sum assured, and the policy terminates. Please note, this one, it doesn't matter how long the client has been there. So we pay 100% of the sum assured if the client passes on as a result of natural causes. If the client passes on as a result of accident, we pay 200%. Also, the policy terminates. So as we say, the money is a good product because it has this other additional, we call them riders. But then it's a good product because there's those riders apart from the good interest the client is getting. Yeah, that is that. Thank you. James?
Yes, Sharon. As you said, as we come to the end of this, I want to start by appreciating the nature of the questions that we've been receiving so far from the team that is online. I can see that they are very, very detailed and investment-oriented platform here that we have today. I just like to add on to one thing. I just wanted to touch on a very, very lucrative investment tool that we had that I just wanted to touch on for 2 minutes. It's called an Animarica. For the ones of us who are online and noting it down, maybe to go to our website and maybe to have check and do a background check on one or two of those issues before reaching out to us. As a reminder, our contacts are just are displayed there on the the green lower part of your screens, and you can always reach out to us at any time. I'm sure we'll share our email addresses. You can also reach us on that. This plan is called an Imarika plan, and an Imarika plan is a plan that you can look at it from all sides, from the Mama Mboga perspective and from the large scale lump sum investment perspective. What I'm saying is this: you can decide that as a person, as a client, I have this lump sum fund of mine that I wish to put into a platform back home or at home for those of us who are home, that will allow you to to do your to look at your investment in better terms. What I'm saying is the plan itself, what does it do? The plan itself, number one, is non-taxable on the interest. That's a very important point for this plan. It's an Imarika plan. It's non-taxable on the interest. What I'm saying is, if today you walk into Britain with, let's call it $100,000, or let's say 10 million in Kenyan currency, what we are saying is you're walking into Britain with 10 million, with $100,000, and investing it in that tool. It has it has a 5-year term, or but you can access the fund from the 37th month at full with the interest rates, with the interest that have been applied to it. Currently, as of right now, we have a 13.7 interest rate declared. It's more of a fixed deposit, but with a longer term, because the minimum term that you can access your funds is after 36 months. That is on the 37th. So we are saying, what we are saying with this plan is, it does not have tax. We don't tax. The interest itself is not taxable. It's non-taxable. So if you walk to Britam and put your $100,000 there, right in, we are saying that at the end of the year, bar the management fee and the small transactional charges here, which is 0.3% per month, or what we say it's 4% per annum, you are looking at a very good return rate of 9.7%. And the 9.7% that I'm talking about is on the initial investment without any tax. This is funds that will be deposited straight into your account. Now, what's the difference with this plan with any other plans that we are talking about that I know clients and most of our viewers do in other lump sum investments, like fixed deposits of banks? In banks, you will have to be charged a tax rate on the interest, which is 15% if it's a lump sum on wealth management and the likes of that. But in this plan, though it's a 36 month, it's a 60-month plan with access to the funds at 36 months. It's a plan that ensures that that tax rate, you are experiencing a tax relief on your lump sum fund, and 15% tax relief on this fund is something that is very huge and beneficial to clients who want to do it in a lump sum nature. Now, the other thing about this plan, it will be able to offer you a 50,000 life cover, and it will be very beneficial to you if you're looking to do a lump sum and look at your investment grow on a very stable basis and on a guaranteed basis without the tax rate attached to it. So that's it from me, Sharon, today. I believe that our contacts are here. Whoever feels that from the list of products that we have discussed today, one that looks to be a custom fit, because we say the shoe, he who wears the shoe, feels where the pain is. So I want to believe that when you look at these plans, you will be able to gauge and see, I think I liked what I had from that guy. I think I liked what I had from that lady. Let me contact her, and our contacts are right there. We'll be able to engage you further and work on a custom fit solution for you. Thank you, Sharon, and back to you.
Okay, let me talk. Thank you so much for for all who've tuned in and those who will tune in after now, because I've realized some even watch after the session is over. One thing I want to clarify, we are James, Ruby, and Sally. Sally, unfortunately, her addresses are not here, but she'll forward them during after this, and they'll be there. And then again, the investment plan is something that is good for everyone who really plans for the future. In fact, when you invest for the future, your time when you are now uh, like you've retired, you are able the active times, and you no longer have your active days there behind you. It's good to have something that you can plug in, that it's soft and it gives you a peace of mind, and that's what we are trying to sell here. And we are giving a solid investment. One thing, we are not a company that is here today and tomorrow is not there. And again, we are struggling to pay. I told you, Google is going to be your best friend. We are able to give our lump sum money, whichever amount. We are not a small company that will struggle paying in. And that's why we are inviting groups, individuals, and don't fear, just approach any one of us. And the other mistake that clients make or people, now it is me, James, and Sally presenting here, and you make something like you just go and get another different agent from Britam, and then you purchase, and then somebody just messes you up. It is us who presented this thing here, and it is us who will walk you how the company works. If you make a mistake of, not a mistake, but you go out and go get somebody else, in fact, the mistake won't be mine or James's or Sally. So that's what you are trying to say. It is us who's spoken to you, and it is us who's given you a promise. And on this platform where Sharon is, it is me that Sharon can easily call, because Sharon ananijua, and Sharon knows now James and Sally, and says that so and so brought his investment. Then we'll ask, whom did he give? So you have to be specific or deliberate, or you have to make a decision that when you're coming to invest, either call James, Ruby, or Sally. If you go ahead, get a different agent, it messes you up. In fact, we won't be answerable. And then maybe you say, and then you argue, tabia tu za Wakenya, you argue that, oh, insurance is an insurance, I can go to a different insurance. Different insurance groups work differently. The products we've given you work with Britam. So you go out, they mess you up, you come back and to this forum and you say these people are not true. We'll have to ask you, whom did you approach and which insurance company did you go for? Because there are some insurance companies which are just there for a little while and they are gone. So this is what I'm trying to tell our diaspora brothers. So many have immersed you in your investment, and some have tried and they've failed. But today, through Sharon, we brought you things that are working. And previously had said, this is something that you can take to the bank. We are assuring you that the questions like the one Nani Sharon asked, that there are some people who invested and now they want the lump sum money. If you ask them bit by bit, you realize they were sending money to an individual. But with us here, you won't send money to Ruby, nor Sally, nor James. You'll be sending money directly to the bank. My duty, to the company, my duty as Ruby or Sally or James is to see how it is like we are acting as a bridge and we are connecting you and we are following you and showing you the steps where to follow. So this is something that I would love to share, because I know from now, because we had some people asking and others had confirmed they wanted to invest. And you realize that others who would have, they've chosen maybe to go another way. And it's just I'm trying to say, if you pick somebody else, it is okay. Maybe that somebody else is whom you feel comfortable with. But if they messes you up, don't blame Sharon, don't blame Sally, don't blame me or James. Just do what is right. Tuachane na tabia za Wakenya wanapenda shortcut. Just follow the path rightfully, and I'll be responsible because I'm on record that you can take me to court if I mess up with your money. So thank you, Sharon, for this. And now your closing comments.
I see, Ruby, you really talked so powerful about that last end part, and for sure, that's the truth. You find we tend to trust our friends or agents, trusting them with our money because we want to be questioning them like, where is our money going? But now you say that the money needs to go directly to the bank. So those who are investing need to stop sending that money to the agent in order to forward it to the bank. You, by the time utakuwa unatafuta pesa yako, it will all be gone, probably if the person is not trustworthy. So you know how money can change people, can even make a long-term friendship to end, kwa sababu we tend to get greedy on people's money. So just watch out where you're investing, and just follow the right channel. Sometimes we get lazy also to do the right thing. Like now you're being told to take the money to the bank direct so that at least you're sure your money is getting to the right place. But you feel you're too busy in order to make that extra step. Remember, when you're over too busy, yes, and the money gets lost after 5 years of investing, who will be too busy again between the two of you? One will be busy crying, following up this money, wasting time, not making more. And the other one maybe atakuwa ameendelea kutajirika or getting more richer on your money, and where you keep going back down. So one thing you also mentioned, Ruby, is you said someone can invest. I'm sorry, we're supposed to be winding up, but you made me think of one more item to ask. Like people can invest as groups or individual. So let's say we have a Chama group. Can we come as a Chama group, let's say maybe 10 people, and get a package, start investing? But I know people's interest. What if maybe one Chama person dies along the way? Or do the group get in as one entity and considered as one bigger entity?
Sally will take you through that.
Sorry, if you're coming as a Chama, Sharon, thank you for that. We would give you, there are different products for Chama. For example, Imarika. Imarika, we have Imarika for Chama. Now, what happens here is we will be giving a statement every 3 months for the Chama, but every month for individual. So what happens, you will be seeing as Chama, we are growing this much, but then as an individual, because probably, for example, let me use Kenyan shillings. For example, you're paying 10,000. Your other colleague is paying 5. The other one is paying 20. So at the end of maybe like 3 months, you have different figures, of course, from different people. But so the statement I will be showing you how much you've contributed. Now, in case of death, Imarika, you're coming in as a Chama, but inside that Chama, you have individuals. So in case of death, we will pay the individual person who's passed on, of course, the free death cover of 50,000. And then the investment, the group would decide. Would you maybe want to black in maybe one of their employees, not employees, but a relative? Or do you want to return the money? Or that would be the group's discretion to decide.
And again, in the Chama, you start with the 10 people and above. That's when we call it a Chama. You don't come like 2 people at Mkokwa Chama. So it's always the minimum is 10 people and above. And you know the Chama works so nicely because when you pull out your resources, they're humongous. Like, yeah, you find that like these people who've invested in Kutusuri, there are 300 Kenyans living in the US. They came in and their apartments are so beautiful. And we said, now why don't we just sell this to Sharon's group and the other people that they can come be contributing towards a particular project. And the good thing about coming first to the insurance and then it gives you time to decide on what you really want to do. You know, you don't want to be, we have the money now, we want the plot now. No, when you're contributing towards the insurance, it gives you time to be scouting around, traversing the country to decide on which decision is good enough. And then now when you already have made the decision, now you can come now with, you can now have your money and build. The mistake most people make with investment is that you wait until you have the money, then you start making decisions, which is wrong. No, make the decisions when you don't have money so that when money walks in, you already have a decision for it. So you won't mess up your investment. And that's the good thing about encouraging you. Continue, even if you not, in fact, we love those people who not yet made decision on what investment they want to make. So that you just save. When the idea comes in, the money is now there. So that's what I'm trying to say, that just save with the insurance, and at the end of the day, you'll be a happy person because you shall have not wasted your money.
Thank you so much, Ruby. That's good to know, and thank you, Sally, too, because I know there are different chamas. There are, people most people normally say there is no security on this chama, someone gets the money and runs away. So it's good to know that there is some protection somewhere being offered by a company. And just to let you know, even this group, Financial Hikers, some years back in 2018, started a group called Caribbean Hikers Cooperative Society. It's a registered society in Kenya. We are currently, I know, investing somewhere else. We haven't been speaking too much about it because we were still trying to weigh our ways out, learn the steps of a cooperative society, but we'll soon start talking more about it and then consider ways forward. So it's good to know about this chama. I know we'll explore it more. And once again, thank you all so much. We are past our 1 hour mark that we are targeting. And I'll say this, I know what is shared is not the end of everything. They were doing summary. So if you want detail, if you're concerned, if you really feel like we are halfway in the year, that you want to make a new move, get started. It's never too late to get started. That's what I normally say. If you made a mistake somewhere, lost some money somewhere because you're told about things and they didn't work, if you're still intact, your hands are working, your head is intact working, get going. Count it as a loss and keep moving. Start afresh and you'll appreciate the move you made today or in 1 month's time. So the best thing you can do to yourself, like Ruby said, start, working on it. You don't have to wait for that money to come in order to start saying, hey, now I have the money, what else am I going to do? Envision, plan, get going. Otherwise, thank you all for tuning in. Thank you, Sally, Ruby, James. I know it's not over yet. We are all about financial empowerment, and this is just a session to give back to the community because I know education is power. And money issues is one of the boring topic people don't like listening to. But if you know you want to get out of that situation of struggling, sina pesa, sina chakula, nani atanisaidia na rent, you need to learn to change your mindset and get started. Because even us talking about money, it's not that we are millionaires and billionaires, but we are on the way to our success. Till then, thank you all for tuning in. If you have a topic you'd like to share with us, inbox any of the admins and we'll be glad to have you. You can reach Ruby, James, Sally on the numbers listed, and let's get ourselves situated. Thank you all for watching. Have a blessed day.
Sally's number is coming soon. We just hatukuiweka tu.
It's okay. Thank you. Thank you.
You can add it on comments. I saw you did you can
Yeah, we win.
comment. Okay. Thank you once again, everybody. Bye-bye for now.